Nigeria's headline inflation for July 2022, 19.64%. This is, let's see, a 17-year high. We're looking at month-on-month inflation figures now at 1.87% in July. Food inflation 2.04%. Core inflation 1.75%. Yeah, they're the headline numbers for year on year. So there it is, 19.64%. 17-year high versus where we were in June, 18.6. Food inflation, 22.02%. Pretty much all parameters rising. Core inflation, urban, rural, same issues, or rather same metrics on the month-on-month scale as well. Joining us to discuss further, Samuel Oyekanmi, who is a macroeconomics analyst with Nairametrics. Samuel, good afternoon to you. Thank you so much for joining us. I first want to get your take on the triggers behind this latest increase that we've seen.
Yeah, of course. So the situation around inflation for Nigeria has been, one of them is the depreciating exchange rate has really gone down so far in the year. At some point in July, we saw the exchange rate hit over 700 naira to $1. And then also the ripple effect of the Russian-Ukraine war pushing crude oil prices significantly higher, and then Nigerians having to pay higher prices for fuel. There was also scarcity in some major cities in Nigeria. So more like this inflation figure we are seeing today is just a ripple effect of what has been coming down the line so far in the year.
I want to get your take on the accuracy of the figures. And when I say accuracy, not to cast aspersions on the Bureau of Statistics, but just accurate in the terms of how much these figures reflect the reality on the ground. Diesel, for instance, up 300%, food products and so on and so forth, triple-digit increases. So, you know, there's that talk. We had Bismarck Rwane, Managing Director, CEO of Financial Derivatives Company Limited, last week to talk about inflation. And here's what he said about the basket. Okay, so we don't have that clip yet, but pretty much here's what he said about the basket. It's supposed to be reconstituted every 5 years. And the last time I believe we did it was 2009. So essentially we would be on, I think, our third go around to have the basket reconstituted. What do you make of that?
Yeah, I totally agree. The MBS has not really reconstituted or restructured these baskets over the years. And 2009 years was the last time that was done. And of course, yeah, demography has changed. The population size has increased. Interest of people have also changed over time, and that should have reflected in the new numbers that we are seeing, which is of course not true. But then when you look at it also, looking at the inflation rate, why I would not really say might not necessarily be, it should be depicting reality, because an average person really would want to consider the fact that prices of these have gone up 200%, prices of that have gone up 300%. But we need to understand that the over half of the items in that basket for our CPI is food, and food is quite a volatile item. So while some of the items are going up, some are actually coming down. By the time you do an aggregate and put the effect of those prices going down and the ones going up, you definitely see that there will be some form of trade-off between services, food, energy, and a host of other items. So yeah, at 19.8% might not necessarily be reality, but the reality should not be too far from that.
Well, what about I think I heard you mention FX earlier, if I'm not mistaken. What about the pass-through effect of foreign exchange on what we're seeing on the inflation figures?
Yeah, I think that is quite significant. Averagely, if you go to ask anybody in Nigeria right now, you want to buy something, the first thing you're going to hear is, okay, why did this stuff go up? They'll tell you, oh, exchange rate, depreciating exchange rate. Before it used to be recession, but right now everybody says it's dollar, even if they are not buying anything in dollar. But then look at the financials of most of the listed companies in Nigeria. You see that their cost of sales have gone up significantly, and that tells you how much of a strain that this FX has cost on them. A lot of them have to import a lot of their raw materials from abroad, of course, and that is FX. So yeah, it does a lot affect, and that is exactly what we are seeing play out in the month of July. The fact that the exchange rate at the parallel market went as high as 700 to $1, and that really has reflected in the prices of goods and services across the country. If you look at the numbers year to date, exchange rate has actually depreciated about 20%. The parallel market, official market, that's depreciated about over 3%. All this will, of course, affect on the prices of goods and services in the country.
Yeah, I'm glad you mentioned that. We were looking at the half year, I think it was Q2 numbers for Okomu Oil and Presco last week. I think Okomu's cost of goods sold were up about 360 something percent, while Presco was up about 65 to 66%. So I'm glad you mentioned how this is impacting costs on that particular line item for on the income statements of a number of these publicly traded firms. So that's publicly traded firms. What about the average Nigerian, Samuel? What does this mean for their disposable income?
Inflation rate at over 19%. What it's telling you is that, okay, so typical definition of inflation is saying that the purchasing power of Nigerians has been eroded. Now, this is a country whereby saving or investing is not really somewhat encouraged. Now, the fact that a lot of people have to now spend so much on their basic items, the necessity, more or less means that they don't even have as much spare income to even save or set aside for future or for unprepared for circumstances. And that's just the reality of things. Nigerians having their income being fixed at a level and have to spend so much now means that they practically have not so much money to play around anymore. And then with the exchange rate, the interest rate hike by the CBN at 14% now means they don't even have as much access to credit as they would have had between 2020 and 2021. And that's really a strain on our purchasing power.
Okay, so that's purchasing power. What about investment returns? I think the real rate of return has to continue to fall further into the negative region. What do you make of what the impact is on investment returns?
Practically right now, most of the investment portfolios for open up for a Nigerian right now is typically negative. So we are all getting negative returns. So if you look at the stock market right now, it has gained 16% year to date. Comparing that to the current inflation rate, that's over 3% real returns. Talk about the treasury bills. Treasury bills the last time was around 7%. That's also negative real returns of about 12%. Federal government bonds, all these fixed securities that you expect to be safe havens even for Nigerians are actually giving out negative returns. It just more or less closes the opportunities for Nigerians to invest. And even there used to be a time where cryptocurrency would have been a safe bet for most people, but right now I don't think it is quite attractive anymore, even if in recent days we've been seeing some form of upward movement, but then it is not as attractive. So it more or less shuts the door for investment opportunity to people in Nigeria, and it's just quite the reality right now.
All right, Samuel, let me throw these questions to you. How do we bring these figures down? How do we decelerate these numbers to single digits, if I dare ask?
That's quite that's a daring move. But then first you need to really look at the Nigerian economy and then consider what are the factors that are contributing to this inflation we are seeing. And one of them is structural problem. Another is exchange rate problem. And then the CBN has raised interest rate twice, I think about 250 basis points this year in a bid to curb inflation. But then it is not really going downwards. That is a big question for us. So what is causing this? The fact that we still tend to import so much. When you look at until this year, we have been having negative trade balance because of our huge import duties. We spend a whole lot importing agricultural produce, spend a whole lot in importing petroleum, and all of this affects us because the global economy is going through inflation right now, and then we are also importing that inflation into the economy, despite the fact that we have our own underlying structural problem. The fact that we do not have good roads, our farmers do not have easy access to their farms. The fertilizers we are also importing, the Russia-Ukraine war. If we must bring this inflation rate down, we need to tackle a host of issues. And talking about structural problem, we need to have good rules so that a little increase in petrol does not cause a significant increase in the prices of food items. And that's really the problem. And an issue in Nigeria is that when prices of anything goes up, they tend to not go down, even if the factors that contributed to that increase are normalized. They do not also return back. And that's a question for Nigerians. We do speculate a lot. as much as things are not really going our way, I think the middlemen in Nigeria are not helping us. Whenever the prices normalize, instead that they should return to the actual numbers, at least, well, fuel price went as high as over 200 at some point this year. Cost of transportation went up during that time. And later on, it did moderate to about 180 to 180 per liter. You'd expect that the cost of transportation should also have moderated to reflect that, okay, the price of fuel only moved from 165 to 180. But that's not the situation in Nigeria. We tend to not return them back to their status. And that is also a major factor when we're considering inflation. If you must start, government needs to do theirs by dealing with structural problems and infrastructural problems. The CBN also needs to do theirs by ensuring that monetary policies are put in place in order to ensure that we do not have so much currency in circulation. If you look at from 2020 to now, we've had a huge chunk of money currency being supplied into the economy, and that is also causing, at least to an extent, inflation. And then the people also need to do their own bit. As much as there are no stumbling blocks, they are not factor pushing inflation rate upward, I don't see a reason why we should ourselves be causing panic by increasing prices.
Samuel Oyekanmi, macroeconomics analyst with Nairametrics, thank you so much for your time. Thanks for taking us through those inflation figures. Appreciate it.